Welcome to today's morning report on Wednesday the 12th of August with me, Rich Pro, market analyst at Handset Markets. European trading session has been absolutely pummeled at the open. The Chinese have again, for a second day in a row, they've devalued their currency, and this is having a significant impact across risk appetite. Here we go. Here's the Chinese against the dollar, and look at that sharply up on that dollar renminbi trade, and it certainly has an impact on the on risk appetite. It seems to be a currency war that's being waged now, and certainly that drive by the Chinese to try and help and boost their export markets is not helping risk appetite, because obviously all those competitors are being impacted by that, and metals prices are sharply lower. Let me just show you a few charts to reflect this. Certainly, first of all, talk about the dollar. The dollar is an impact, had an impact as well, because you're seeing a flight into treasuries and safe havens. Treasury yields sharply lower. There's a question now over whether this is going to impact on a potential September rate hike, and that is certainly impacting across the dollar. Dollar is being hit against the euro, against the yen. The reason the euro is lower is due to an unwinding of the a big euro Chinese short position, but also this potential expectation of a September rate hike being rolled back. So what we're seeing is this is the oil price. This is the interesting one, actually. No real move there yet on oil, but certainly across metals prices, they are still sharply lower, and it's not helping risk appetite. Let me just show you that Treasuries chart. Look at that Treasury yield now back at levels not seen since April. So it really is having an impact. Safe havens across the board. That is the German 10-year. Sorry, the Bund yield is sharply lower. Watch out also for the VIX volatility. I think volatility is going to be sharply higher today, and it continues to pick up as these equity markets come under significant pressure. So yes, this dollar rally that we've had in the last couple of months is just rolling over, and there's beginning to be some pressure in the charts. I'll show you focus on euro and also dollar yen, which are two key charts that are showing this this pressure today. Now, what we have got is on the earnings front, on the economic data front, we've got UK average weekly earnings, adjusted at 2.8%, which is ex bonuses. 2.8% was the last month. It's actually forecast to come in at that again, 2.8%, and also at 5.6% on the unemployment level, same as last month. But if anything is above that 2.8%, then that would surely give sterling a boost. Sterling does tend to move around a lot on this average earnings data, or has done in recent months. Then into the afternoon, we've got the US jobs openings, which are forecast to come down slightly at 5.3 million, but still that would be a very strong number. And later into the afternoon, at 3:30, we've got the latest US oil inventories. Negative 2 million is the expectation there, but certainly I think the focus is definitely on China still, and it's going to play out through the day, I think. Now the big impact is being seen on the DAX, which is my chart of the day. Now the DAX was sharply lower. Let me just show you the daily chart first of all. Sharply lower yesterday on the first devaluation, and it's followed suit again today. Now the reason is because German companies export a lot into China, and obviously with China devaluing its currency, that means the Chinese imports into China are therefore more expensive, so that is hurting the German exporters. So that is hitting the DAX quite significantly, down 2.4% now on the DAX on the day. Now we've broken below this initial support of 1152, and that is a key level. Obviously we had this big gap down. That gap is still open theoretically, so again I say theoretically gaps close, but you can see on the DAX there is a significant number of gaps through the chart, so it doesn't tend to be so much of a situation that gaps close on the DAX, but certainly there is a gap still open. on the DAX at 11,278. But your initial resistance comes in at 11,153, which is today's traded high. But certainly this uptrend's been broken. The momentum indicators all rolling over that stochastics crossover. Although it is below 80, I still am looking at that crossover as a negative near to medium term signal. Each time we've seen these crossovers in the past few months, they have all been a negative signal for the DAX, for quite a significant selling pressure. So that's what we're seeing coming through today. On the intraday chart, we've got this this move below that initial support, which I think now sort of reopens the lows at 10,653, which is the key low that we saw back from early to mid July, and also the support. Sorry, just zooming out here, the longer term support, these fib levels. Look how often these fib levels come into play on this DAX chart, on the longer term plays. They are consolidation levels, and the next one is the 50% level at just above 10,800. So that is your next level. But the 38.2% fib level will now become resistance for the bounce, and interestingly enough, that is up around about where the traded high is today, 11,153, so just about 20 ticks away from that fib level. So it certainly is the DAX under pressure today, and I would imagine that rallies are going to be seen as a chance to sell. Here we go on the hourly chart. I've done another fib actually of this rally here from 10,653 up towards 11,800 area, and those fib levels again have been an interesting consolidation point on this chart. So watch out for those potentially becoming resistance levels on the way if there is a rebound. But look at this momentum, certainly on the DAX in the near term. Momentum is sharply negative, and it doesn't look necessarily as though it's going to stop. So having broken below that level of 1160, then it certainly is coming under pressure of the near term. So rallies are a chance to sell, I think, on the DAX, and yeah, it doesn't look very pretty anymore. So good luck in your trading today, and I'll speak to you later. Thank you.